What's up, guys? Welcome back to the channel. Top Market Trading here, and today let's talk about one of the hottest, craziest stocks out on the market, GameStop. Now, GameStop, ticker symbol GME, shot up over 70% today to hit a high of 76.55 before finally closing the day out at 65.01. Now, if we go ahead and take a look at GameStop's charts, we can see that they had a major spike up back in January 13th when they released their holiday sales, which reported a 308% increase in e-commerce sales. On top of that, GameStop decided to hire 3 new directors with extensive background in e-commerce sales. As we move into a more e-commerce heavy generation, GameStop has changed their marketing to gear towards that online marketing sector. So why did GameStop jump over 70% on Friday? Well, there are 2 main reasons why GameStop popped off, and I'm going to go ahead and break it down for you guys right now. Now, for those of you guys wondering what a short squeeze is, I'm going to go ahead and break it down for you guys right now. So as you can see in this article, a short squeeze works like this. Some investors, known as shorts, essentially bet that a company's stock will fall, and these investors borrow stock from other investors and sell it, with the plans to buy it back when the prices fall and then return it to the original owner. However, the problem is with shorting is that the losses are theoretically infinite, and if the stock begins to run upwards, some short sellers will abandon their short and buy shares at the high to return the stock. This in turn makes the stock go higher, burning any shorts who remain in the stock, and in turn choose to cover their own stocks. Now guys, if we go ahead and take a look at GameStop's charts, we can see here that they were consolidating for around 5 days before finally breaking out here on Friday. And as you can see in this consolidation, it was uptrending because you can see here that it was testing these resistance levels a couple times. And as you can see right here at Friday open, the stock was really trying to stay down with all the shorters really attacking it. They really didn't want this stock to go up because that would mean they would have to cover the remaining shares. So once it did break out, the reason why it popped off so much was the fact that all these shorters right here, the 138% of people who shorted this stock, are all going to have to cover their shares as it's going up. So once it's going up, they're going to be buying more shares at a higher price, which caused this big explosion in share price. Now, the second reason why I think GameStop popped off was mainly due to the fact that WallstreetBets was backing the stock. So for those of you who don't know what WallstreetBets is, it's basically a Reddit forum that has over 1 million followers who are all looking to find the next biggest YOLO play. Now, WallstreetBets actually has a lot of pull on stocks, mainly due to the fact that they do run one of the biggest sub-forums for stocks, and also they do tend to attract a lot of young and inexperienced traders. Now, a lot of new traders are going to be on the lookout for the next hot stock, and when a lot of them can't find what stocks to invest in, they're going to gravitate towards Reddit. Now, Wall Street Bets, like I said, is one of the biggest subreddits for stocks, and a lot of the stocks on there are a lot of hitters. So when people go on there, they're expecting every stock that Wall Street Bets mentions is going to be a hitter. So when they mentioned GameStop, a lot of new investors were looking into it and buying the stock based off of what Wall Street Bets was saying. So with the short squeeze happening and with a lot of new investors buying in, this caused that big explosion in stock price that we saw earlier on Friday. Now, for those of you that want to get into GameStop, I'm going to go ahead and go over a couple of key support and resistance levels that you guys should be watching out for to help you better gauge your entries and exits. Now guys, the first 2 level of supports that I'm going to be looking at is the 63.50 line and then the 55 line. As you can see here, they did break this support line right here after hours. They hit a high of around $68 and then finally coming back to close out the after hours trading at 63.55. Now guys, the first 2 levels of resistance that I'm going to be looking at is the 67.93 line, and then here again at the $70.54 line. Now as you can see here, they have been consolidating in this range between the first level of support and the first level of resistance. Now what we're going to be looking for is a tight consolidation for the upside. So if they can consolidate in this range and test this first level of resistance and break it, then that's going to show a sign that this stock is going to be going up for an uptrend. Now, my honest opinion on GameStop is that their share price is a little too high. They only have a market cap of $4.53 billion, and on January 13th, before the big jump, they were only trading around $20 a share. Even though they had a good holiday sales report, that really doesn't justify what GameStop should really be at, which in my opinion should be the $25 range. So if you guys enjoyed this video, make sure you guys go down below, hit the thumbs up button. And if you guys want to see more stock videos just like this, make sure you guys go down below, check out my channel, hit the subscribe button. And on that note, guys, I'll catch you guys in the next one.